Welcome back to Everything Money. We're so happy you joined us today. You are happy, Paul. You're a happy guy.
I try to be.
We're talking.
I get very frustrated.
I'm confused about AMC. The chaos that's ensuing. I was in the Bid and Ask Nation the trading Patreon level in our Patreon page, and people were going nuts yesterday. They couldn't believe it. People were predicting that the AMC was going to go up, going to go down. We put out a video, Paul, and we were so. It's funny. We record one day. We were talking about a price being $23, and sure enough, people are commenting. Now it's $65.
Yeah,
it's all over the place. But the big news this morning, Paul, is what I wanted to get your attention about. Is they're announcing because of this high price and that they probably need money, they're selling off 11 million more shares.
I think 11.5 million.
11.55 million.
And sure enough, it's down 26% as of right now.
Well, let's look at the chart real quick. It hit 60 today, got as low as 38, 39, and now it's back up to 48. So this is a very stable stock.
We're good.
So everybody out there, just understand this is very stable.
It's a good one for your retirement accounts.
Yes, you should definitely put as much money as possible, and they're not.
That was sarcasm.
Don't do that. But what is the point of why are people upset that they're selling off more shares? It seems like a good thing.
So I don't know if they're actually upset.
Yeah, exactly.
So there's a lot of, I call issuing shares outstanding, essentially more shares, basically like a silent killer. And I want to break this down to a very basic standpoint. Let's say you have a business that generates $100 a year, okay? $100 a year, and it has 10 shares. Let's keep this very simple. Seth, how much does each share get in profit?
$10.
Okay,
so I excel at these calculations.
You are incredible at these calculations. Did you use your calculator for that one?
That was all mental. I do have a PhD, you know.
So if you own a company outright with 10 shares, because you have shares as a company, you get $10 per share. You get $10 per share that you own of the shares. Okay, let's say now suddenly you increase the shares by 2.
Well, again, I don't get that. I mean, you're saying I don't get that money. Let's not confuse folks, right?
Well, so here's the deal, guys. When you own a stock, you get access to the money in a different way. The balance sheet either gets better. That's like saying if a company had $10 in its bank account today and no debt, and 5 years from now it has 100, just because you didn't get it, you wouldn't want to own this company? You wouldn't be happy that it went up to 10 times? Of course.
But happiness doesn't equal dollar bills.
Yes, it does. This will equal dollar bills because now a good investor in the market will sit there and say, wait a second, there's $100 sitting in this bank account and only 10 shares. I'm getting $10 per share just in cash for owning it. That's plus the business. The company can then go give a distribution out or buy back shares or do all these things that makes your investment better.
Distribution meaning a dividend?
A dividend.
Yep.
Okay, keep
going. Or
going.
buy back shares that makes your share of the profit much greater.
Okay, keep
and
going.
Your share of the balance sheet much greater. So for everybody who thinks you're not actually getting the money, you aren't getting it physically unless they issue a dividend, but the balance sheet and the financials of the company get better and better and better, and your share looks better because of that. And that's what causes prices to go up.
I see. Keep going.
Now, let's say the 10 shares become 12 shares. Now, instead of $10 a share, you're getting $8.33 per share of the profit. Is this a good or bad thing?
Bad as an investor, yeah.
It can be bad, it can be good, but most of the time it's not great. I look at this saying, this is what people are missing. Now, let's say the stock is selling for $20 a share today. When they add 2 more shares, all of a sudden it went from $200 to $240, yippee. But over time, it'll go right back down because your access to your percentage of the shares profit and business's profit and balance sheet and everything goes down. This is just a very, very, very misunderstood concept in investing, and it's a silent killer because nobody ever looks at the share. Only astute investors look at the shares outstanding. Are they issuing? Are they buying back shares? I don't like it when a company that's expensive buys back shares because they're taking their cash and investing it in themselves at a high valuation. You want companies that have low valuations to buy back their shares because they're investing the capital very well there. Okay? Go ahead, Mo.
Can I make a comment? I was looking at the volume for the day. There were 100,000 shares traded in 14 seconds.
I mean, I don't know if that's
and
good.
I'm just watching it just going higher and higher and higher.
I don't even know if that's good or bad. I really have no idea.
I mean, it's just rapidly insane.
Can you pull up how many shares they were already selling off on the Everything Money website?
Well, how many shares they already had?
Yeah, because I think we showed just in our last video that they were selling off, right? Of course.
Okay, so right now, shares outstanding as of the last quarter, they had 400 million shares outstanding. Now, look at this, guys. They had 100 million in 2016. Last year, they had 104 million. Wow. They quadrupled in last year.
Wow.
I mean, this is crazy, guys.
Add another 11 million?
Yeah, so you're looking at going, you went from owning if you had 1 million shares, you went from owning 1% of the business to 0.25% of the business. Think about that. Let's say you and I were business partners, Seth.
Yeah, we are.
In the sense of like, okay, fine.
Sure.
Great, no, good idea. But you get a share of revenue. Let's say we're business partners, and our business makes $1 million a year. Okay, let's say that hypothetically in profit. I own 80% for Paul, and Seth owns 20%.
Mm-hmm.
Great. So I get 800,000, you get 200,000. Then I say one day, you know what, Seth, I want Mo to be a partner with us.
This is sounding familiar. Keep going.
Well, except that anyways, go ahead. Let's say there are 1,000 shares total. Of this profit, every single share gets how much? $1,000, right?
Yeah.
Okay. Let's say I bring Mo in and I go, hey, we're going to issue 200 more shares.
Oh,
1,200
I see.
shares.
So we're not just splitting those shares anymore.
No. I'm sitting there saying, so now you're 20%. You had 200 shares before.
Uh-oh.
Now you have 200 shares of 1,200. So 200 shares out of 1,200 equals 1/6 equals 16.6%. You used to get 200,000 of this profit. Now you get 166,000. Would you like that?
No.
You would like it if I said to you, hey, but Mo is going to make our earnings go from $1 million to $2 million.
Okay.
Right? But when you're issuing shares, let's say it was just to, hey, I want Mo to sit at home. My brother, hey, I want Mikey. Well, Mikey's already a partner. I want Mikey's kids. I want Mikey's kids to have ownership of the company. I'm just going to give them shares. We're going to issue shares and give them.
Oh boy.
They add no value. Would you like that?
No, that would not be good.
That's all that's happening here. That's all that's happening here, folks. If you think this is good for the company to just issue more shares for more owners, call Crossroads Group, and I will dilute the heck out of you if you invest in our company. I mean, it doesn't make any sense.
Right.
It doesn't make any sense whatsoever. Maybe Mo is a bad example because Mo has added more revenue to the business. That's a bad example, but the kids is a great example because what's my 3-year-old niece going to do? She ain't going to add more revenue to the business, right? And a lot of companies will justify it by saying, well, we're making acquisitions using these shares. Okay, but usually they're acquisitions. If you look at the history of acquisitions by companies, they're not very good. They're not very good for investors usually. Focus on your core business, grow your core business. This is a very fundamental thing that everybody misses in all investing. They forget about, they look at earnings, they go, oh, look at the earnings, it's going great, blah, blah. Okay, a business can be flat. If they buy back shares, the per share value can go up because a flat business that has less shares is now splitting that flat revenue and profit into less shares, and therefore the per share profit is going up.
Mo, are you surprised at the insanity of the market? Is it this share sell-off this morning announcement and this price dropping significantly? Are you surprised they're coordinated to each other or in sync, or is it because this is just chaos to begin with, right?
No, I think that people might see that and it's just the reaction that spreads around. Maybe it's on the Reddit forums or something. Somebody will see this is bad and it's an initial reaction. I could very well see this being up tomorrow, 50%, 100%. And this whole share dilution was a thing of the past.
I assume you're getting nowhere near AMC or having anything to do with it, Paul.
Zero. I'm not doing anything with AMC. Too volatile. There's no value there for me. It's all-time highs, even though, I mean, this is just, if you're buying it for value because you think, oh, if it goes down 40% one day, it's great, you're dumb.
Uninformed?
No, you're stupid.
If you want to day trade it, go for it. On a
Yeah, if you want to
15-minute
day trade
chart,
it.
I mean, there's people that are trading this making tons and tons of money.
If you believe a stock that goes down 40% in and of itself makes it a value play, then I have great news for you. I have a house for sale. I was asking 10 million before, and now I'm asking 5 million. Down 50% in price. Meanwhile, it's actually worth 2 million. But you felt good because the price is down 50%. That's the same thing you're saying. That's just the same thing you're saying. Now, when I see a 50% drop, I say, let me check this out. Absolutely. But based on AMC's recent history, I don't give an F. It's not uninformed, it's stupid.
And going back to the trading part, you're trading this without caring that it's AMC. All you're doing is you're trading candlesticks. And
that's all you're doing when you day trade.
It doesn't matter if this is AMC. It doesn't matter if this is Berkshire Hathaway. It happens to be AMC at this point. Go ahead and make money on it that way.
That's the great thing about chart trading. You don't care about the company and the fundamentals. All you care about is the numbers of the ticker symbol. That's it.
Yep.
The tickers.
Exactly.
How are people day trading this when I see so many times people are commenting in the Bid and Ask Nation on Patreon that all the trading platforms are locked up. There's so much volume.
Yeah, so that
You just get locked out.
That's the risk that you're going to take with it. You have to know that there's a chance that when you're in it during that whatever period of time you're in it, there's a very good chance you're going to get locked out. It's a risk. If you're willing to take that risk, go for it.
Well, Art, that's our take on AMC. Another crazy AMC video. I don't think it's going to slow down anytime soon. I don't know when this.
Well, maybe it will.
Equates out, but
I mean, guys, what's Tesla done lately?
Yeah, GameStop slowed down.
yeah, I guess so.
But look
slow down.
look at Tesla. Look at Tesla. We always forget about Tesla here. I always want to bring up Tesla because the one that was going to the moon, it's still higher than I think it should be. It's still way higher than it should be. But the point is, it was at 900 and now it's at 600. It hasn't gone much. It's been fluctuating between 550 and 650 for a while now. All of a sudden, do we hear people talk about Tesla a ton? Except for the restaurants that they just announced today.
Very disruptive.
Yeah, very disruptive
They are disrupting.
restaurants.
I mean, this is
Their hamburgers are going to be disruptive.
All right, that's our take on AMC. Good luck out there if you're trading this. If you're not and you want to be a little more disciplined, feel free to join the Patreon where we talk about fundamentals of companies and numbers behind these stock tickers. What do you got there, Paul?
Look at this. This is the first article on MarketWatch I just saw. Want a richer, happier life? Learn how to invest. But guys, when we say learn how to invest, it doesn't mean just buying a company because you think they make cute products. No, it's understanding the financials and the fundamentals and saying, can I buy $1 of revenue, $1 of profit for less money with potential for the future that's consistent? That's what it's about.
And it's funny how little that is just every other time in life you want to buy something on sale. You want to get a deal.
It's the biggest anomaly ever.
It comes.
I'm always flabbergasted. In fact, I told Rockman and Darnell we were on a call last night, our FaceTime, our weekly FaceTime. I said to them, guys, I think I'm going to start paying full ask price for every car.
Yep.
Just to prove that it's so stupid that people spend 20, 30 hours or days of their life trying to save $1,000 in a car, but they don't even spend 20 minutes even trying to research the fundamentals of business.
20 seconds.
20 seconds. I want to be like, okay, from now on, I'm going to go find the best price, but whatever's listed on the internet, I'm just paying.
Did you get your Porsche yesterday?
I did.
2
days ago.
You didn't drive it?
Yesterday I did.
How nice.
Yeah, and the day before.
That's our show. Tickle a thumbs up on the way out. Love you guys. See you. Patrons, you know I love you. See you guys.